This is the December 5 edition of Commodity Week.
Todd Gleason's services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists for the day include Naomi Blohm. She's at Total Farm Marketing. That's totalfarmmarketing.com out of West Bend, Wisconsin. Aaron Curtis is here from Midco. He's in Bloomington, Illinois. And Ellen Dearden joins us from AgReview out of Morton, Illinois. Commodity Week, of course, a production of Illinois Public Media. Find us online. Listen to us on demand anytime you'd like at willag.org. And there today, you'll find a way to register for the Farm Assets Conference and the Illinois Farm Economic Summit Series. They're all part of a four-conference series. The Farm Assets Conference kicks everything off with the farmdoc team. Will make all of their presentations on campus at the iHotel Friday the 13th. That's next Friday. You can register at willag.org. That one also includes some other functions along with Eric Snodgrass from Conduit Ag and others. All the details online. Again, the cost is $80 through the weekend, and then it goes up for each of them the closer you get to them. So you want to get yourself registered. You'll also find the Illinois Farm Economic Summit Series agendas there as well. They will be the following Monday, Tuesday, and Wednesday in Mount Vernon, East Peoria, and DeKalb. Let's get a list of items that we should talk about from our panelists today. Aaron Curtis, I'll start with you. What's on your list?
Well, I look at the range on corn and soybeans back till August, and we've had, roughly a 25 to 30 cent range on corn, 50-ish range on beans, and it looks like it's going to continue in that pattern, but be curious to talk about some factors that may push us out of that, or are we looking for more, I'm going to call it boring type trade here through the rest of December?
Ellen Dearden from AgReview.
Tag team on to that comment about the narrow ranges in the grains. Keep in mind that the bean and corn basis both has been doing the work, and that really seems to me a reflection that end users need product right now.
And finally, Naomi Blohm, anything to add?
Well, let's keep an eye on that USDA report coming up on Tuesday next week. We're hoping to see some stronger demand in the categories for maybe corn and soybeans, and how does that affect ending stocks here in the U.S., and then, of course, taking a look at the global ending stocks picture as well. But again, just getting ready for that report and year-end holiday trade.
Well, let's talk about this range that we have been in, Aaron. I'll let you take up corn. Fairly narrow, 25-cent range. When we get to the top and the bottom, we just kind of turn around. Why is it so very narrow, do you suppose?
Well, I think a couple of things. The support, I believe, is coming from the export side. We had a really good start to the export program. We're running we had another good export sales week here again this week. We're running about 330 million bushels ahead of last year's pace, so good sign. Mexico off to a great start. We're seeing some interest, a little bit in Europe and a little bit, obviously, in the Asian countries as well. U.S. is really fairly competitive on the global front until next spring. So those are all good signs. I think probably the resistance point is the farmer selling. We estimate the farmers sold about 40% or so of their crops. So they've got a big chunk of corn to sell here. And anytime we see March corn up in that 440 to 450 range, the farmer engages again. So that's the limiting factor. But I also think it's just a lack of interest. Obviously, a lot of volatility going on in the equities and the dollar, crude oil, those outside markets. Not so much in the grains, though. Corn volatility continues to be relatively low, and I think a part of it is just the lack of interest related to don't know what's going to happen with ag policy moving forward with the White House change coming in January, and it just feels like some of the trading interest is just waiting and seeing what may happen with tariffs, what may happen with biofuel policy. And until some of those things are ironed out, it just seems like it's best to not play in the sandbox, so to speak, Todd. It just seems like just a general lack of interest from what we call the managed money crowd.
Well, let's stay with corn, but we'll switch to the cash. cash side of the marketplace, Ellen Dearden. Narrow ranges, but you tell us, and we've seen it, of course, that basis has been doing a lot of the work. This is particularly the case, I believe, in the western part of the United States. It may be the case here as well. Can you give me your broad view?
Well, this market has really been all about processing so far in the last, 4 weeks, not this past week, but the previous 4 weeks, we set records on ethanol, corn used for ethanol. And so that's been a huge factor. And it seems to me that the end user thought he was going to steal a lot of corn at harvest. And as Aaron pointed out, that really wasn't the case. Not that much corn moved at harvest. So all of a sudden, that end user, or the processor at least, is short bought. Add on to that we've got this good export pace. So, you've got two sides looking for bushels, and that just says we've tightened this basis. Gone from about 25 under to a good bit of the market is a nickel or more over the March futures right now. So that's a pretty nice rebound in basis.
Is there a reason to believe that will continue, Ellen, do you suppose?
I would say probably not going to continue that sort of a narrowing of the basis, because we'll see these ethanol plants slow their grind. We saw a drop in this past week's demand for corn at ethanol plants, and the transportation system probably is going to slow down too. I see the river movement is really considerably less than it was 2 weeks ago. I think that's a reflection of these cold temperatures, and barge tows are narrowing up to get through some of the areas that have low water and now cold water too.
Naomi, can you build into the conversation we've had about corn so far, and basis to some extent, the ethanol and export numbers that you're expecting from USDA in December, and whether those consumption figures might go up from the United States Department of Agriculture based on what's happened so far this fall?
Yeah, so to Ellen's point, that the basis is really trying to pick up some more grain right now, and demand for corn for both ethanol and exports, as Aaron had said, working hard ahead of schedule, ahead of USDA projections. And we had hoped that the USDA would have acknowledged that back in the November WASDE, and they did not. So now we're thinking, all right, it's going to come next Tuesday. And so the trade is now, I think, starting to wake up to that fact. We're looking to see demand for ethanol increase, demand for exports increase, and that is bringing down the ending stocks number on the pre-report expectations by about 50 million bushels. So in the November report, we had U.S. ending stocks at 1.938, and right now the average expectation for Tuesday next week is 1.887. So my best guess here for how markets may move, we are range bound for now, but from a technical perspective, what's really been exciting for chart geeks like me, we love to see these bullish key reversals. So today we had a bullish key reversal on March corn, July corn, December corn, after testing important support levels of the 100-day moving average. And that also happened last week on Friday, and we're still defending this uptrending channel that we have been in since August. So if we can get some more momentum going, if we can get the March contract to get above 436, that gets us above this web of moving averages that's just been holding the corn price hostage. And if we can get through that, next target higher is nickel increments, 440, 445, and then the big hurdle up there would be 450. That would be the high from early October, also the 200-day moving average. So if we can get that movement, that would be fantastic. It would be a great opportunity for producers to make more cash sales, both for corn in the bin, and then even starting to focus on the December 25 crop and forward contracting that too.
Do you suppose, Aaron Curtis, that wheat will suppress that potential move, and or that soybeans will hold it back?
I probably have a hard time trusting the wheat market, Todd. It just continues to disappoint over and over and over again. So probably concerned that maybe the beans kind of hold it back, because there's not a lot of bullish storyline in the beans moving forward, especially as we go to Feb forward when Brazil starts to harvest what looks today like another record crop. So probably more concerned that beans act as a little bit of an anchor to corn moving forward. But I think wheat's probably gone down enough here in the short term. I mean, obviously, concerns with Russia's wheat crop coming off a lower production, and the start of their new crop is off to a little bit of a rough start as well. So maybe that offers a little bit of support to wheat, but it's going to be interesting to continue to watch this divergence, which looks like from a fundamental standpoint we could see on corn and beans, because the outlook for corn definitely a little brighter than what the soybean market looks like right now.
Then, Ellen Dearden, you've been listening to the conversation and have talked with you about the basis levels. You've discussed them doing most of the work in here. Can futures step in and pick up part of this piece of an upside puzzle?
I think the big question mark to me on answering yes there is funds have exited their big short position in the corn, but they've not really gotten long. If the funds would decide, if we get up towards that 200-day moving average, up in that 445, 450 area basis, the March, and the funds decide to be long, then I think that we would really see the futures market do more of the work than the basis.
Is there any indication, Naomi, that might be the case?
Well, we've got a lot of activity starting to stir with marketplace. So funds now long about 100,000 contracts of corn, still short in the beans and the wheat. But as we head into year end here, a lot of shifting and maneuvering can happen just from fund position squaring, along with keeping an eye on weather around the world. I do feel like the soybean market has the ability to move a little bit as we start to see how the soybean oil demand is strong, just absolutely explosive and ahead of schedule for USDA projections. So I think we'll see that on the report next week, and that'll be supportive. But there is that factor, though. Is it going to be enough of a movement that we can get corn, soybeans, and wheat all long from the managed money perspective and become buyers in the new year? Or do we just get everything to the point of a nice little rally, the funds get neutral in the market, and then the new year comes, the calendar flips, we start to focus on South American weather, and that just, takes all of the air out of the balloon and prices start to go back down and funds become sellers again. So there's a lot of uncertainty ahead, but my biggest takeaway is whatever kind of a push we can see over the next 2 to 3 weeks, usually there's some kind of a seasonal rally for corn, soybeans, and wheat into Christmas, but I think that's just going to be a great opportunity for some cash sales.
Okay, so you're on the idea that if that comes, cash sales should be made. Ellen, are you of the same bent? If there is a rally between now and the winter break and Christmas, that farmers should sell cash, probably both corn and soybeans?
I think they should definitely sell cash corn just because the big basis move. I think that's been the trigger for me on the corn side of things. We've not seen as much basis improvement in the beans as I'd like to see, so I'd rather be a little bit hesitant seller on the beans, but I am moving corn.
And Aaron, will they follow through, do you suppose?
Yeah, I think there can continue to be. I think the beans are probably the bigger question mark, Todd, because there's just not been much bean interest, and cash above $10 is the target right now. And unless we see that, I think it continues to be quiet. We continue to see a little bit of corn move on these up days, and my target's still in this 440 to 450 range on March corn to add to sales. And if we can get Jan beans in that 1020 to 1040 range, I'd be adding to sales too. But farmers seems to be pretty reluctant to sell cash beans unless they can see a 10 in front of the cash number. And until that happens, I think that continues to keep bean sales quiet. But corn continues to move in small pockets here, Todd.
You told us that you thought corn sales were at about 40% for farmers. How far along are they on soybean sales?
Not much more. We estimate around 45% sold. So during harvest, early harvest, the farmer was pretty active on selling soybeans, but once cash values slipped below $10, it dried up pretty quickly, and they've been relatively quiet ever since. So that's a month and a half now where they just haven't been very active. So We're using around 45%, on an average basis across the Midwest. Obviously, there's going to be some areas that are a little heavier, a little lighter than that. So, you start looking at 4+ billion bushel crop. It's quite a bit of sales to come. And then you look at what Brazil's got going with their currency, continue to weaken up a little bit. It looks like a big crop coming. There's a lot of farmer activity that could still affect the bean market here over the next 6 to 9 months.
Historically speaking, then soybean sales are far more behind than the corn sales at this point.
Yeah, I would say on a historical basis, that's correct.
So that usually many more soybeans are sold by this time of year than 45%, and that farmers are less likely to have as much corn sold. Both are running behind, but the point I think I'm trying to make, Naomi, is that when you look at total sales, farmers are more behind on their soybean sales than they are on their corn sales. Is that what you're hearing from them?
I would say that the folks who usually sell beans off the combine at harvest have done that, and there are some beans in the bin. I couldn't put a quantity on it, but I can tell you that the producers do have some targets in mind for prices, and they're looking to make those sales at the end of the year here or the beginning of January. Just bearing in mind, again, seasonals, we work higher oftentimes for prices into Christmas, and then once the calendar flips, then we start to, again, focus on that South American weather, and prices fall lower, and it happens. It's a pretty big seasonal pattern, lower prices throughout January and into early February. So I think with a lot of producers with, higher interest rate costs and just a lot more expenses kind of in general than years past, they're going to be ready to be making some sales on any kind of a rally that we see and not wanting to store things maybe as long in the bin as they had in years past.
Ellen, Dearden, I know you follow the technicals as well. Anything in the charts, soybeans or otherwise, that you have been watching closely?
Well, one of the things that I've been watching is these nearby beans have held on breaks back down to that 975 level. We closed on Thursday nearly 20 cents above that. So I'd really like to see whether January can take a strong look at getting over upside objective to be in that 1025 range. I think that would be a normal type of a move for this month. And if we would get that, I would think there'd be a lot of fellows that could get $10 cash then.
And should they at that point? I take it you're of that opinion.
Yeah, I just think, when you've got your loan costs are somewhere close to 9%, I think you have to be moving some beans, yeah. I think South American crop prospects are really strong, so that colors my thinking.
What did we think? Are we hearing, Aaron, 175 million metric tons out of South America?
Yeah, USDA is at 169. CONAB is in that area. They'll both have updates next week. But yeah, as we continue to see things trend well, I think we're pushing possibly into that mid 170s before it's all said and done. The potential is to get there, especially with our higher bean acres this year. It's just if we continue to see the weather cooperate. And so far, so good as we move into the first part of December.
So what are the other things, Naomi, that you're watching, whether they be outside markets, internal affairs, something domestically in any of these marketplaces?
Well, still keeping an eye, of course, on anything we can pick up from the new administration. There was some news today that Chinese buyers are going to slash their imports of Canadian canola. So maybe that will be news for us from the standpoint of bean oil. Maybe that we'll see some news there. So there's all sorts of straws to be grasping at. We've got a Fed meeting coming up again next week, the week after, like on the 18th. So that's something that's going to affect the market, the value of the dollar, all sorts of things to be looking at. One last thing on soybeans, I did some research and looked at the last decade and tried to see, is there any truth to the expression that the bulls get Christmas? And the average rally over the past decade from some kind of a Thanksgiving low into the new year for soybeans is close to 90 cents. Now, you look at the years of the past decade where we have bigger carryout, and that rally is closer to 60 to 70 cents. So going back to build on, Ellen's point of her technical targets higher, if we can get back up to the 1025 area, now I'm talking with the March contract or the 1040 area, that really would help to coincide with seasonals. And I think there's going to be a lot of technical trading to be watching. And then as the holidays come into play too, sometimes the volatility gets either really, really low or can get really exciting with depending on if there's a lot of market participants or not. So you have to really be on your toes into the holidays. And that's, of course, when most farmers want to relax, but you can't, because a lot of times during the year, some of your best market prices actually come the week between Christmas and New Year.
Ellen Dearden, anything that you've been watching closely in the other markets?
I think it's very interesting that this new administration appears to be ready to hit the ground and be running. With all the names thrown out for cabinet positions and advisor positions, I think that shows that Trump learned that you needed to do that from his first term. Thought it was interesting today. I heard that Peter Navarro, Trump said he would appoint him as his top trade advisor. And I know folks in Washington think highly of Navarro's no-nonsense type activity. So it'll be interesting to see if that one flies.
Is he still in jail? I thought he was. It would be interesting to see whether that happens or not. I'd have to actually go back and look. And Aaron, what's on your outside market list?
Well, outside markets, I think, is just watching to see what happens with all the rumors around the tariff threats, right, between Mexico, Canada, China. Like I said, we've got a really robust corn export program with Mexico leading the way there. So, the hope is that we continue to get those sales delivered here as we move through the year. China has still been creeping around on some beans here from the U.S. here recently, trying to fill in some gaps until the Brazil soybean harvest. So that continues to be a little bit of a good sign. We're seeing that in terms of what basis has done. River values in Illinois are trading at overs, and Jan March bean spreads into 5.25 cents. So that's telling you the farmer's not cooperating in terms of what the need is for soybeans to move on the cash side. But I think the political stuff from our elevator system folks, I think that's the most interesting thing to watch here is what happens with the tariffs, and then, of course, what happens with some of the biofuel policies, 45Z, those kind of things. If we can get some more clarification on those things here in the next few months, and that's going to probably continue to see what the end user, what they continue to drive on investments in some of their asset management here moving forward. So those are of interest to our groups here over the next few months.
So some quick corrections to make. I went back and checked. Peter Navarro has been out of jail for about 4 months. That one will correct there. And then I went back and pulled the season's average cash price, the 5 years rolling average from USDA, just to see really where soybeans are at this point. And they're on pace, actually, if they're at 45%. By the end of the month of December, 53, 54%. By the end of the month of January, around 70% of soybeans are generally sold. So let's move to some final discussion points. When you look into the USDA final figures that are coming in January, and I know we get a report next Tuesday, but when you get into that final set of figures that farmers are now filling out for their some 70,000 surveys of yields, do you expect any changes in yield or acreage to show up? And I'll start with you, Ellen Dearden.
I think the bean yield could come down just a hair, and I know that seems a little bit odd for a lot of people at this stage of the game. I would not be surprised to see the corn yield down to 183, maybe 182.6, something like that. So a very small decline there, but a larger one on the beans. Acres, not so much.
Similar with what Ellen thought, just slight tweaks to the yield numbers. I don't know that the USDA is going to maybe do anything to really rock the boat this go around. I think we'll be more focused instead on that potential big crop coming out of South America unless the weather really changes there. But global carryout, I think, might be the bigger talking point for the next year, and it's going to be large for soybeans and starting to trend lower for corn. But then we're already thinking ahead that we're going to be seeing more U.S. planted acres in the spring for corn. So, yeah, I'm actually not looking for too much. But, that January report can bring some fireworks, but I'll be surprised if they actually give us anything this year.
Yeah, so I'm looking at my numbers. I just pencil in 0.3 of a lower yield on corn, 0.2 on beans. So not a lot of change, but did kind of go with the trend from what we saw in November. So a little bit lower yield on both. And I think on the corn side especially, the export number has potential to continue to be too low. So I'm looking for potentially over the next 2 or 3 months that we could see another 75 to 100 million bushel increase in the corn export side here, assuming we don't throw a wrench in the plan come January 20th. So I continue to think the corn balance sheet continues to tighten up, closer to something in the low 1/8 before we're all said and done. But it's gonna be over a few month period.
And let's turn our attention to each of your final thoughts. And Aaron Curtis, I think I will continue on with you from Midco in Bloomington, Illinois.
Partly to echo what everybody's kind of been saying here about the ranges kind of boring people or putting people to sleep. I think we've got to be careful on making sure that doesn't influence your marketing plan. So, in this 440 to 450 range on March corn, 1020 to 1040 in January beans, be looking at those areas to continue to add to your risk management. And it doesn't hurt to have some offers working up in those areas just so you can have them, especially if you're traveling or are busy around the holiday season, so that you don't fall asleep on this market if we do trade back to the upper end of these recent ranges.
Naomi Blohm from Total Farm Marketing out of West Bend, Wisconsin. Your final thoughts for the day?
Yep, absolutely agree with what Aaron said. And shifting gears a little bit over to the livestock sector, we've got some pretty big topping signals on a technical perspective there, and we're starting to run out of bigger friendly news. So we could start to see the funds sell that marketplace off because they're long in the cattle complex, and they might want to show some profits on the books for year end. So if you need to do any hedging for cattle, really take a close look at that.
To piggyback on that comment about cattle, the hog market heavily long from the fund side of things, and that the hogs today or on Thursday when the cattle market was failing, the hogs just stayed in a narrow range. That looks like a very negative sign to me on hogs as well.
Commodity Week, of course, is a production of Illinois Public Media. You may listen to the whole of the program anytime you'd like on our website, willag.org, or look it up in your favorite podcast applications. Our thanks go to our panelists, including Naomi Blohm, Aaron Curtis, and Ellen Dearden. I'm University of Illinois Extension's Todd Gleason.